Hey, what's up, everybody? It's Rob from Vanguard Realty Alliance. Today I'm going to be interviewing Rich O'Neill on how he got to 40 properties by 27 years of age, which is totally incredible. He's an investor in the Philly suburb and a good friend of mine. Let's get into it. Hey, Rich, how's it going, man?
What's up, Rob? Good to see you.
Good to see you too. So I'm excited to interview you today. I think it's going to be a really interesting talk because I have to say you're a pretty amazing guy for what you've accomplished at such a young age. You were saying how many properties do you have currently?
So we've got 40 units now.
40.
hmm
And how old are you?
27.
I'm like 36, so I don't know. I don't know where you'll be when you're 36, but
Yeah, we'll see.
yeah, man.
A lot can
Yeah.
happen between now and then.
So I'm excited to share your story with people because I think it's pretty amazing what you've done. And I mean,
Thank you.
you haven't done it for that long, have you? How long have you been at it?
Started in 2016, so just over 4 years now.
Wow. So what strategy are you using?
So I use the BRRRR strategy: buy, renovate, rent, refinance, repeat. Started with my first one back in 2016. We paid all cash for it. Did the rehab with all cash, refinanced it, got all of our money back out, and have been doing more or less that process ever since.
I'm curious about how you got started because I'm sure a lot of people are. Did you just save up money or how did you start with cash?
Yeah, I had a decent paying job before that. I was in sales, and my dad and I, actually, my dad was a partner of mine. Between the two of us, that's how we came up with the initial cash. Yeah, he's still a partner today.
Oh, that's cool. So your dad is a
Yeah,
partner in your business.
yeah, yeah. It's a lot of fun. He likes to say that he's a silent partner, but every once in a while he likes to, you know,
Make
discuss a
some
little bit.
noise.
But
Okay, cool. So on your first unit, I know that's probably where a lot of people are, right? They're just trying to get started. And the burn method you mentioned, just to fill in the audience a little bit, the basic strategy is that if you can, let's say you buy it for $50,000, put $25,000 into it, and you're in for $75,000, and it's worth $100,000, you can go to the bank and refinance out the original $75,000 and have all your cash back owning a rental property basically with no money in the deal, right?
exactly, couldn't have said it better.
All right, so that's a cool strategy because I guess basically you pretty much can have an infinite loop of properties, and that's how you got so many.
Yeah, as long as you can keep doing that, then you can keep going for as long as you want to stay active in it.
Would you say like finding good deals is what slows you down? Is it the refinancing part? What part would you say gives you the most friction?
There's always something. I learned from a mentor of mine. There's four different components to this business that are going to slow you down. It's financing, management, construction, and deal flow. And at any given time, at least one of those is going to be screwed up. So it's just kind of constantly figuring out which one is not working well at the moment and focusing your time on that, fixing it, and moving on to the next.
Got you. So I know like the post COVID market is super hot. Are you still able to find good deals in this market?
It is much harder. And it's been that way for probably a year now. COVID maybe even just accelerated it a little bit more for some reason. In 2018, I bought 19 properties. In 2019, I bought nine. This year, I've bought three.
Wow.
So that just tells you, and it's not like I'm working less or anything like that. It's that I'm just having a harder time finding a decent deal. I'm kind of stubborn. I don't want to mess with my numbers. So because they worked for me, I won't buy anything unless it can hit those numbers. And it's getting harder because those purchase prices are going up. And honestly, the price of material, the price of labor are both going up as well.
Gotcha.
So the combination of the two are making it a lot tougher to make it happen. I think the biggest problem with that formula is that all those things are going up very quickly. Rents are not following as quickly,
Hmm.
at least in my market. I'm
Gotcha.
sure they will over time, but I can't necessarily risk that.
You've probably been pretty successful because you've stuck to your numbers, right?
Yeah, and there have definitely been times where I didn't, and it's bit me. The good thing about this model is that even if, my numbers don't work exactly right, I might get stuck leaving 10 grand or something in a deal. It's better than putting 20% down on a deal or paying all cash for a deal and never pulling the money back out.
Right.
My worst case is I have to maybe leave 10 grand in the deal, which at this point is not such a big deal anymore. At the beginning, it really was, because that was the only way I could eat, was turning deals over. And that's part of how we structured our partnership. Was I got paid when we bought properties and fixed them up. So that was how I earned my living, my active income. But then obviously we own the assets moving forward.
Gotcha. So you structured it with your partners that you got paid for basically executing the process.
Correct.
Yeah, that's interesting. I didn't know that.
Yeah.
2020's got some challenges, but I mean, buying 3 deals in a year is still a lot for most people. You know what I mean?
Yeah.
I'm just looking to do 1 deal this year.
Yeah. In 2016, I only did 1 deal. We bought that first deal I bought in August. It was rented by, I think, October, and I didn't buy my next deal until February of 2017. It takes time. It's not going to happen overnight.
Gotcha. And so when you did it, I mean, did you dive into it as like a full-time job, or did you do it on the side?
I dove in. So I quit my job 2 weeks before I bought my first house.
Wow.
And yeah, went right into it.
How did that feel?
Scary, obviously. But I had a lot of support from my wife. My wife was huge. She more or less told me to do it. She pushed me to go that direction, because I was okay with my job, but it wasn't necessarily what I wanted to do for the rest of my life. And we were actually on our honeymoon, and she said, if you don't love your job, you've been talking about this real estate thing, why don't you just go do that? And I said, you know what, you're right. So I got home from the honeymoon and put in my 2 weeks, and here we are.
A great wife is worth rubies and gold, or something like that.
Yeah, absolutely. No, she's phenomenal.
Yeah.
But I also had, I grew up in entrepreneurial family. My dad had a business growing up. My father-in-law has a business. I think he's on his 3rd business now. Having that example set before was really nice as well.
I just did another interview a few days ago with our broker, actually.
Right.
And, we're talking about the mindset of everything, because it is, I think, I ask you about when you were afraid. I ask you about, how you felt about things, because I think mindset, and maybe even who you surround yourself with,
Definitely.
is so important. Do you agree with that?
100%. Yeah. I mean, my father-in-law, he also does some professional speaking on the side. And one of his lines is, you can live out of fear of scarcity, or you can live out of faith and abundance. Just filter every decision through that concept, and ask yourself before you finalize that decision, are you making this decision out of fear and scarcity or faith and abundance? And if you want to go that direction of faith and abundance, then make sure you're filtering that question.
Yeah, that's an interesting thing, and it's funny because I see some people are afraid to invest, but I know more people than ever are investing, which is actually interesting. I saw the statistic that the share of people buying houses as investments went from 9% to 15% over the overall home purchases. So it's interesting that there are some people who are afraid right now, and some people that are investing more heavily right now. And so, Rich, tell me about, where are you investing?
I buy in Eastern Delaware County. So Collingdale, Lansdowne, Upper Darby, not so much Upper Darby anymore, but that general vicinity.
Gotcha. So you're buying in Eastern Delaware County, which is basically right outside of Philadelphia, a little bit west of Philadelphia, but not West Philadelphia.
Correct. A little bit west of West Philadelphia. Yep.
Gotcha. So you're focused on a specific geographic area. Has that helped you?
Definitely. That was another piece of advice I got from a mentor of mine. He always said, if you're gonna start buying, buy in one direction from your home. So I live in Chadds Ford. so Chester County. And if I am going to go out to visit one of my rentals, I can now go visit all of them because they're all within 10 minutes of each other. Or if you're following that advice, you could also buy in Brookhaven or Aston or some of these other areas on the way home or on the way there.
Right.
But I've just found the numbers to work in that specific area, probably 5 or 6 different boroughs. The other good thing about that is that as soon as something comes through my email, I can see the street, I can see how much, and I can see what kind of condition it's in, and I can mostly analyze a deal in my head in about 3 minutes.
Gotcha. So because you're so highly localized in your knowledge, and you say the deal comes across your email, are you getting emails from wholesalers or just people you know who are sending you deals?
Wholesalers, I have my license, so I set up my own searches in the MLS, but anymore it's mostly wholesalers.
Gotcha. So what percentage of the deals did you say would you got on market versus off market?
Changes with time as well. When I first started, it was probably I'd say 70% on market in 16, 17. That shifted in 18, and last year I didn't buy any.
You didn't buy any on market this year or last year?
Correct.
Gotcha. You're working with wholesalers. So for people that don't know, wholesalers are people that find off-market deals and then remarket them to investors like Rich. And, they take a little spread of, a couple thousand, $10,000, whatever they take. So they can make money. That's one way to make money in real estate is to be a deal finder and then have a person like Rich, buying it at the end and, flipping it and turning it around. So tell me about like a typical deal for you in terms of the numbers, like, what's the purchase price? What's usually the rehab cost? What's the after value? And like how much other costs are in there, like with refinancing and things like that?
Sure. So they're very similar in every deal. It's usually, I can purchase it anywhere from 30 to 50, sometimes up to 60. Anymore, it's closer to 60. And then depending on how cheap I bought it for, I'll put anywhere from 30 to, sometimes even 40 to 10, depending on how much I bought it for. And we'll hope to get it appraised for 75 to 100 and refinance the whole thing out. Gotcha.
So your deal size probably on the spectrum is a little bit smaller. It's like, right. A $30,000 house. I don't know. I've never done a deal of that size. I mean, that's a little guy.
Yeah, it's small for sure.
But I mean, you're saying for you with these small deal sizes, when you look at their rents versus the expenses, I mean, is there a reason why you're going small with the deals?
So a couple of reasons. First, that was all I could afford when I started. As I've grown into it, I've looked at other sizes and other asset classes, and it comes down to a return on equity calculation is one of the biggest concepts. So if I have $10,000 in equity and I'm making $300 a month in cash flow, that's a good return on equity. And on this size of a deal, I can leverage that out, or since I'm leveraging it out at 75%, that 10% or that $10,000 is not a very large deal. So my return on equity is pretty high in most of these deals if I've got them levered up well. Whereas if you bought something with a $200,000 after repaired value, you're only taking out, let's say, what's that, 150 back out of the deal. So you've got $50,000, and if you're making $300 in cash flow off of that, then your return on equity is much less than what I'm doing. Now, obviously there's some trade-offs with that. I have probably a C-ish class tenant, and they're not quite as nice buildings, and there's definitely some more headaches that come along with that. But from a financial standpoint, if you can kind of wrap your head around that concept, then the numbers make a lot of sense. But not everyone wants to deal with some of the headaches that come along with it.
So do you, like, as a rule of thumb, do you use like a 2% rule or anything like that?
2%, the 2% rule is probably like a sniff test. So if I can say, okay, this deal, they're asking 50,000 for it. I'm going to put just, let's say easier numbers. These aren't real compared to what I usually do. So let's say you buy it for 75. and you're going to put 25 into it, it's $100,000 all-in cost. Then if I can't make $2,000 on that in rent,
Wow.
then it's not worth it to me
Wow.
in my market. Now, obviously those numbers scale down a little bit. It's more like 75,000 and 13 or 1400 in my market, but that's like just the most basic level. Somewhere like Westchester, that's probably closer to a 1% because A, your taxes are significantly lower, and B, your purchase prices are much higher. Your rents are higher as well.
Yeah, I mean, I find out in Westchester, if you can get a 1% deal, it'll cash flow here. I mean, it's
Mm-hmm.
not.
They're totally different markets, and there's nothing wrong with either one. They both have their challenges, but there's nothing wrong with picking one or the other.
Gotcha.
It all depends on what you want, what your capacity is, and what you want out of your real estate. For me, it was, I want to have the most cash flow, even if that means a lot more units and a lot more headaches, which I'm okay with because I don't mind working hard. And honestly, I mean, I say I work hard. I have to work hard when I have to work hard. There's a lot of time. This job offers a lot of flexibility. If I have to do something, I can take care of it, and I'm happy to do it. But it gives me a lot of flexibility. One of the best things I ever did was hire a property manager
Yeah.
to take care of these, and I probably talk to them 2 or 3 times a week, and the rest of it kind of takes care of itself. So that's the other part about the finances of it is, your numbers should always support property management. And even if you're self-managing, run the numbers as if you're going to pay a property manager, because at some point you will want to. And if you can't support it, you're stuck.
Right. I guess you got to sell that asset then if you're going to
More
go
or
to
less.
property management and it's not going to cash flow,
Right.
which, you don't want to make no money.
Yeah. I mean, it's a nice story to tell yourself that, I can self-manage it and make all this money. And yeah, you can do that for as long as you want, but at some point you will decide that you don't want to do that anymore. And if it doesn't make sense at that point, then you're not in a great spot because you just bought yourself a job.
Property management, how much does that cost?
All in, I think a good number is like 14%. So that should include, at least in my stuff, that should include tenant turnovers, which most property managers are charging 1 month rent to lease up a unit. And most property managers will charge a little bit to renew a lease as well, because there's some negotiation and time involved in that. As you get bigger, you can negotiate that down a little bit more because you're giving them more volume. Or as a starting number, I would start around 14.
So 14% of your rent per month.
Right. And most people calculate 10, and that I think is a bad idea.
Could we go through like the numbers on a specific property that you have?
I mean, we can use the first one I bought as an example. We bought it for $25,000. We put another $25,000 into it, and then at the time it was worth $75,000. It's now up to $90,000. We've recently refinanced it, so our mortgage is a little bit higher. We get $1,225 a month in rent on that one. My mortgage is about $365. Taxes are $175. Insurance is about $75. Let's call it 10%. So that's about $100. That's about $120, give or take. Vacancy, I calculate 5%. So that's about $60. And I generally calculate about $100 a unit for repairs a month. Yeah, $100 a month. So all of that combined is roughly $300 a month.
So you're making $300 a month after expenses. So $1,225 minus $925, $300 a month on a $90,000 property.
Correct.
Gotcha. And you've got no cash in the deal.
Yeah, that one we've actually taken cash out of, extra cash. So I've been paid quite a bit to own that property. So I think total all in was about 50. About 55. So we now have a mortgage on it for about 67. So I've taken an additional $12,000 out of that on top of what we paid.
Gotcha. So you've made 12,000 cash plus $300 a month for the past 3 years.
Yeah.
3 years. 4 years, I guess. So we'll do some quick math. On your 50,000, you've made 28,000.
Yeah. Yeah.
But you have no money in it.
Yeah, so that's the beauty of it, is we turned that 50,000 around in about 4 months.
That's amazing.
And that initial 50,000 went into the next property, which turned into the next property and the next and the next and the next.
When you really break it down for people and you start talking about numbers of buying a house at 25,000, 30,000, I say now you're probably looking at 50, 60,000. It sounds like,
right.
But these, the mortgage sizes on a property like that, or even like if you are getting a hard money loan, which is a private money loan, I mean, they're not unmanageable.
No.
For most people, it's very.
And that's one thing that, that 40 unit number is like, it doesn't mean a whole lot, because, you could have someone that has 5 units that has a bigger portfolio than me.
Right.
In dollar value. And it's just a different style.
I think it's one way to get started, and you can also really build a big business around it because there's just a ton of units out there. It's not like you're going to buy all the units in Delaware County.
Right. And the cash flow can support some other things, like, sometime, hopefully in the next year or two, I'd like to hire like a handyman. There can be some economies of scale there. Again, more headaches, more hassles with each unit, but it can be scaled. It's just a lot of work.
There's the cash flow element, right? You're also having the tenants pay down debt.
Right.
And then you're also having appreciation of your assets just due to the market, going up, right?
Yeah. And in my market, appreciation is like, if you get it, it's great. If you don't, you can't plan on it.
Right.
Because our market has pretty much had at least my properties, my locations, the values have only fluctuated maybe 10% over the last 30 years even. We're focusing on the cash flow, and if we get appreciation, it's great, but we don't need it for our strategy to work.
Gotcha. So you got a strategy that you feel is fundamentally solid from understanding and from an investment standpoint. Yeah, I mean, that works. I mean, you can't go wrong there. If you get appreciation, it's icing on the cake, right?
Exactly.
All right. So obviously you said you got a C-class tenant right now during COVID. How are things going with collecting rents?
Well, I mean, obviously we've got our challenges. There are some tenants that understand that we can't evict them, so they're saying, we're not going to pay. That is a small percentage. It feels like a big percentage to me because I have to deal with it. And yeah, exactly. I have to deal with them, and they cause a lot of frustration. It's a small percentage of the portfolio that's doing that.
Gotcha.
Our rent collection percentages are maybe down 4 or 5%.
Well, I think it's probably a short-term situation. I mean, because the whole system has to turn. You can't not have evictions. You need evictions for the system to be healthy.
Yeah. And once this thing is lifted, the moratorium is lifted, January 1st, there's going to be about 100,000 eviction filings in every magistrate court that the judges are just going to do this and say, okay, you're not getting seen until like October. So, there's ways to make it happen, but you just have to be a lot more creative.
Do you think that the tenants that aren't paying you can't pay you, or they just think they can get away with not paying you?
I know in most cases that they can. They've demonstrated to us one way or another that they're able to pay, and they just won't. And they have come out and said that you can't evict me, so I'm not going to pay.
Wow.
Yeah. Now,
that probably
again,
makes you angry.
The fact that I have scaled this quickly helps insulate me from some of those things, because, if you have one tenant where that happens and, you have to go and turn over a unit for $15,000, $20,000, that's devastating on one unit. But across 40, it can kind of get absorbed.
Scale definitely has its advantages. I mean, for sure. I mean, obviously, when you're getting started, if somebody wanted to start doing this, what would be your advice or starting point for them? What would you suggest to them?
Get really clear on what you want. There are so many different ways to make money in real estate. And if you try to dabble in each one, you're not going to get good at any of them. Could lose money in some of them. For me, it was I want to. That's the name of my company is Fleming Properties. I want the company to buy me a Fleming someday. It's a 55-foot boat. You can put the picture in here. That's my goal. Is the company is going to buy my wife a boat, a Fleming, by the time she turns 39. I promised her that when she was 19. So once I had that long-term vision, I could kind of back into how many units do I need to get there? How much cash flow how much cash flow do I need to get there? How much does each unit have to cash flow to get that? And blah, blah, blah. So you can back into all that and it starts to get easier to find that niche. And, one of our goals with that boat is we're going to touch each island in the Bahamas, and that's like 700 something islands.
Can I come?
I can't do that wholesaling properties. You know what I mean? Because that's active income. That is something that I need to do every day to keep making money at that. Theoretically, once I get to that goal and it's somewhere around 175 units, I can have a property manager managing all of that, and I just have to check in on my satellite phone, and then I can throw it off the boat when I'm done with
it. So you thought about, this is my goal, this is what I want my life to look like in X number of years, and then you thought to yourself, okay, how do I get there? And
I think it's important to have something in front of you regularly. It doesn't have to be every day, but I made it really clear every freaking day that this is what I'm working for. You don't have to do that, but having it regularly show up in front of you to remind you what's going on, of what you're working towards. I think that's important as well.
Well, Rich, I know you pretty well. I mean, you're a pretty intense guy. You're very Rich, just tells it to you straight. You know where you want to go, and you're going that way. And if somebody's saying some kind of BS to you,
get out of my way if you're gonna stand there. Yeah.
I know that's true, man. So, Rich, thanks so much for talking with me today. If anybody wants to reach out to you with questions or anything like that they might have, how can they reach you?
Yeah, so I'm on Bigger Pockets. I'm on Facebook, Friends with Rob, and my email is just my name, richaoneal@gmail.com. Feel free to send me an email. That's usually the best way to get in touch with me. Is one of those three.
Awesome, Rich, man. Well, congratulations on all your success. I'm very impressed with 40 properties. I mean, no matter what the size of the property, 40 properties is a lot to go through. I mean, with
Thank you. Yeah.
Buying, renovating, refinancing 40 times.
Yep.
Ain't nobody got time for that. All right, man. You have a great day.
All right. Thanks, Rob.
Okay, everybody, now it comes to the most important part. How do you do this for yourself? And I'm here to help you. So if you want to get connected with an agent that understands the BRRRR method or understands real estate investing, reach out to me. I'm going to get you an agent in your area to help you do that. All right, everybody, have a great day. Like and subscribe, please. It really helps. And I'd love if you leave a comment if you have any questions. Check out my information in the description down below, and I'll see you next time.